What's up, homies? Today we had an update, so I want to go over some charts with you guys so you can get a good idea of what's going to happen tomorrow, but what could also happen on Wednesday with that CPI release. And I think the most important thing right now that I'm going to look at is Apple because they have that little bit of an announcement tomorrow. It's morning about, I think it's at like 10 a.m. Eastern time, so pay attention to that time. But overall, how I see Apple playing out is if you see right here on the MACD, we have a possible cross about to happen here. And I believe if we are able to come down into these levels tomorrow and possibly buy back up out of this zone, we could see that bounce with the CPI. But that's not necessarily what I'm paying attention to fully because the market has made such a move higher, and we'll get into that with the Qs. Mostly what I'm starting to look at is this 2 hour here, and we are starting to see a curl up down here on the MACD. Let me erase that. And if this MACD does curl up tomorrow with the announcement, a lot of the times with these announcements, it is a buy the rumor, sell the news type of thing. So we could see the MACD actually turn up and then Apple actually come up into this area, even get this retest that we've been talking about before that CPI launch with a pretty drastic move, or we could just see possibly just coming up and filling this gap up in here, even coming up into this resistance area that I've talked about in the previous videos. But overall, right now, we're going to have to dip into the indices to see if we're going to get that crash with the CPI. So I've been covering Tesla for about a week now, and I told you that this thing was coiling up for a big move because of this little triangle it was setting up, and we actually called down here for this pop all the way up to here. But then this happened, and a lot of people would say this is a fake out. Even I would say this could be a fake out. And what I wanted to happen was dip down to go find some buyers in order for me to take a trade out of this, but we just gapped up out of this, and we actually went all the way up to the expected move for this pattern, even blew past it. The reason I think Tesla could be a sign that the CPI could be the crash now is because of how high it is moving and how fast it is moving. This thing is ripping up on a 2 hour. We're starting to see a possible divergence develop. And I believe if tomorrow we actually see this extend into this gap resistance area, then we are probably going to look pretty weak going into that CPI. We look like we need even a pullback at that point. So if the CPI does come in hot or people just read it as a bad sign, then I believe that this actually will start to come down over the next few days after the CPI. Now, even though I keep saying that this could come down here because of the CPI, because it's moving so rapidly fast and we're starting to see divergence here, if we get any kind of pullback here and we see Apple pull back into that resistance zone, this could lead to the seasonality being correct, and we actually could see that extend for a couple more weeks. I just don't see that happening at this point. I said in my last video, if we are overextended by the time the CPI comes out on a lot of different charts, then we most likely are going to see more downside, and maybe Apple just gets a lower high. Okay, now on the SPY, we have a few things to talk about. We have a MACD on 2 hour that has curled up, and I said in my previous video, if that MACD does curl up, then I see us extending into higher levels before that CPI, and then crashing the market afterwards. Now up here, I've circled my purple line. These purple lines here are actually the expected move based on the options priced in for the week. So to see this in the beginning or even middle of the week come up and touch into this zone, it's a good sign that we actually could see some weakness to the downside, because I think it's about 68, sorry, I'm terrible at drawing this, but 68% of the time it lands within this zone throughout the week. So easily we could see this pop higher into this area, even cut above it, going up into our trend line, which is just between these 2 points here. The last two highs we had a higher high up here, and then we had a lower high right here, and we just line those up, and it kind of lines up perfectly. So it's starting to make me believe that this CPI might actually be the bad news that crashes the market. It's important to pay attention to all scenarios. So if this 30-minute does decide to cross down tomorrow and then possibly tick up slightly at the end of the day, we will see a cross here on the MACD, meaning the momentum is shifted to the downside. That could mean that if the data is bad, we just plunge to the downside, but it also could show signs of a possible reversal, giving us that seasonality trade. I just don't see that as being the most plausible right now. This looks like a little bit of a short squeeze to me, and we could just squeeze higher and higher and higher, come touch this trend line, break out of our 68% chance of landing in our purple zone here, and then we could just drop when that CPI is released because inflation is going to be back in this market. The reason why I'm saying the CPI most likely is going to crash the market at this point is because we have not seen that pullback. We didn't get that pullback from this level that we wanted in order for that to be good news for the market. Now the market is at an extended level. We're starting to see calls leak into the market, and this thing most likely will just extend to the upside, even could break out of this trend line with these actually two prior highs here, and it could break out of that, giving us another top here, possibly a double top right when the CPI is released, and then that will crash the market down. Another reason I'm starting to think that the CPI actually will be the thing that crashes the market is the same reason the SPY. Okay, this thing is actually moving even more quickly to the upside than SPY is, and I believe this is some sort of short squeeze that could continue upward, especially on the Qs because of that Apple news releasing tomorrow morning. And that most likely will set up some kind of big divergence on a 30-minute, a divergence on the 2-hour. We might even cut this high a little bit and come up into this area. We might even go to the gap fill tomorrow because this market is crazy. Look, we just moved up, 1.17% in a day. Tesla's up 10% in a day. So something crazy could happen with Apple that makes us fill this gap. And then the CPI comes out. It proves that inflation is back in the market and we crash to the downside. I could be wrong, and this could come back down into these levels, go find some buyers around that 50 on the 30-minute, and then we see the CPI get shrugged off, and then we move higher with that seasonality. So we just want to be paying attention to the actual number that comes out in the morning, Wednesday morning, because if that number is tame and we see the reaction that people want this thing to go higher, we should pay attention to that and look at the charts, see what's happening in front of us. But overall, if we keep extending to the upside tomorrow, I believe that we are going to crash because, as you can see, if we just keep going up, this thing is just going to keep getting overextended. We're going to go into overbought territory, and we're going to need some kind of pullback at least. And if that just lines up at all with the CPI, I just see it as being bad news. Whenever the CPI is about to release, we want to pay attention to that 10-year yield and the 2-year yield, but we're going to pay attention to the 10-year yield on this channel. And as we can see, we're getting some sort of consolidation. And what I most likely see from this point is more consolidation all the way into the CPI, where we maybe start to coil up a little bit more, and then we see some kind of drastic move because the data comes out hot. Don't think that this 10-year yield can't go higher, because we have a MACD that looks like it wants to curl up on a daily, which means that this thing actually, after the CPI or because of the CPI, could see a very high move to the upside, which will really shake the market. Once this high here is broken, you're going to see a lot of the algorithms kick in. Everyone is paying attention to this level, and most likely once this level is broken, everything is going to tear down. Next, we'll look at TLT because it has that negative correlation with the 10-year yield that we just looked at, and we're seeing some little bit of sign of divergence here, which means in the short term, we actually could see that yield pull back, making TLT actually go higher, which might give us that little bit more upside in stocks before the CPI. And then maybe we come into these highs here and then we just drop off. As we zoom out on TLT, the overall move looks like it's going to be to the downside, meaning yields are going to go higher. Once this crosses, we're probably going to see TLT come all the way down into my price target of about $88.14. And then we might see some sort of rip to the upside, which is actually what happens in recession. My overall take on this is that this move is going to happen. It's going to play out. We're going to see that TLT come down, that yield rise with an expectation being beaten on that CPI coming in hotter. And then it's going to really shake up the market. We're going to see that crash of 2023 start to unfold. Something that we've gotten right for the past week is the VIX. And the VIX, we actually caught most of these pops except for this one, but I saw it as a good sign that volatility is going to come back into this market pretty quickly. Kind of like how Tesla popped out of its zone and showed us that buyers wanted that to go higher. Now I believe the same thing is happening with the VIX, and the VIX actually did come all the way down just like we called. Yesterday's video, I actually told you that I'm expecting this to pop a little bit higher into this resistance. Looks like we got that pop. And now we're coming down into that next zone here where we need to see if this can break to go to lower levels, even come all the way down to a reading of about 12.74. And then we might see some kind of divergence on a 4-hour, which I'll pull up next just to show you it on a on a 4 hour so you can see it in front of you. And then we see that rip to the upside. And I believe that volatility will stay in this market for weeks on weeks until we get possibly some kind of bounce with the Christmas season. I save this for last because I think it's the most important, and I think it's the highest probability of happening. Is we called this move in the VIX coming all the way down. We called this little pop, and now we need this point here to break so that we can go to fill the gap, or even possibly go to these lows here, which is a previous support from way back. And if you just look at how well this lines up, how well this A, B, C pattern lines up, it just makes total sense that the CPI is going to come in hot and start to bring volatility back in this market. So the main takeaway from this video is that we actually could see some sort of upside with the CPI if we get some sort of pullback. But if we get to those extended levels, it's looking like the probabilities are going with a crash right at the CPI, or if not, just a day or two after. I'm going to be updating you every single day on what could possibly happen the next day or about a week in advance. So come back if you want to see those videos. Thank you guys for making it to the end of the video. Hope you have a great day. Peace.